Simplicity is about subtracting the obvious and adding the meaningful. John Maeda. My friends, we look at the charts today, we see stocks are up, bonds down, gold up, Bitcoin down. Let's first look at the S&P 500 on this weekly chart. Nice up movement right up that weekly trend line. Price percent oscillator is a little bit more than flat. Derivative oscillator heading up. Look at the 2-day. What do we see on there? And again, a little early warning signal as this is just the first day of the latest 2-day candle, but it is pushing through what had been a nice, really strong 2-day trend line. Pay attention to that. Price percent oscillator weakening. Derivative oscillator is too. And of course, we look at the half-day chart and we can see where things peaked back on Friday morning of last week. And as things have just sort of rolled over, penetrating that 2-day trend line over the course of the day on Thursday. Pay attention to that. That is our smallest chart. You mainly focus on the 2-day and especially on the weekly, but keep that in mind. Let's look at the Nasdaq 100. What's going on there? Price percent oscillator a little more than flat on the weekly chart. Derivative oscillator is gone green on us. We see the Heikin-Ashi candlesticks moving up quite nicely after last week's weekly vertical crossover. What do we see on the 2-day? Again, some weakening. We can see, like the S&P, pushing through that 2-day trend line. That is a little warning bell. Just means pay attention right now. It's not a 2-day crossover going down, but it is some weakening. Again, all the charts all the time to know what's going on. We saw also on the half-day pushing through that 2-day trend line in the morning, further in the afternoon. Now remember, it was an up day for both those stocks, but our average pace, that is the Heikin-Ashi candlesticks, and the price movement is just showing us some weakening in those indicators. So we pay attention to all the things all the time, and as you practice trade and as you learn and you chart these markets every day, you'll understand the nuances. That's why we say 10 to 15 minutes. Let's look at bonds. Down for the day, 0.15%. Now, nice green up week, may very well have a weekly vertical crossover at the end of the week. Would love to see the derivative oscillator go green by Friday afternoon. Of course, your buy-in point for your practice trade, around 345 to 350 if we still have this crossover occurring. If bonds hammer down tomorrow, then of course don't expect that to be happening. What do we see on the 2-day? Red down candle forming, still above the 2-day trend line. Pay attention to any significant weakening there. First day of that latest 2-day candle. And you can see 2 days of down movement, still hovering right over that 2-day trend line. Again, we can see where things crossed over. I've already redrawn our trend line on that half-day chart. So pay attention. Important things to watch, particularly if you're thinking about jumping into that practice trade near the close of the market on Friday afternoon. Gold up again today. Bam! I'm loving it. Particularly after that last gold crossover failed us miserably, but gave us a great spot to jump in for 2 weeks of down moves on gold. For those of you who went in and did some practice puts, worked out quite well. But what do we see going on? Well, price percent oscillator spiking up, derivative oscillator, nice big green up candle. What do we see on that 2-day chart? Again, 5 days of nice up movement. Would like to see the weekend with this latest 2-day candle topping higher than the prior one. Price percent oscillator, derivative oscillator spiking up. Let's look at the half day. Again, not hitting higher highs. We want to see that continue to move up. That is where we are on gold. Lastly, we go to Bitcoin, our big downer for the day, down 5.24% on the New York Stock Exchange Bitcoin Index. Still have a green candle, but not as tall as it was. That wick is still there showing us, where things spiked up. Price percent oscillator still going up, which is good. And the derivative oscillator, this is on our big chart on the weekly, but you can see how we're struggling to stay above that weekly trend line. What about the 2-day? Well, we have a weak candle forming, a slowdown in the up movement about where it had been. Price percent oscillator heading down. Derivative oscillator's already gone negative. Now, if Bitcoin crosses over going down and closes on that on Friday, then of course bets are off. We would wait, of course, hop out of Bitcoin if you've not already taken profits in it in your practice trade, and wait for a recross going up or for Bitcoin to do a major pullback and the weekly crossover going down. Nice thing about charting Bitcoin and learning how to do that is you don't have to take the losses, right? Practice, trade, learn how to do this. What do we see on the half day? Down in the morning and hammering down in the afternoon as Bitcoin was just devolving. Price percent oscillator, though, hasn't crossed over going down yet. So maybe it'll bounce off. Who knows? We'll watch, wait, and see. That is where we are as we end the day on Thursday, going into Friday. Again, alert, potential weekly vertical crossover going up on 20-year bonds. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.